Good afternoon and welcome to another edition of African Economy. I am your host, Wang Fon Walter. Now the top stories. Zambia plans $1.1 billion oil refinery in Copperbelt to cut fuel import. Rwanda listed a new U.S. travel advisory amid global security review. Ethiopia enacts long-awaited startup law to boost digital economy. Plus, Kenya to roll out national crypto policy and a virtual asset service providers bill. Zambia signed a landmark agreement to develop a $1.1 billion crude oil refinery and energy complex in Dola, located in the country's Copperbelt region. The new facility is expected to process up to 60,000 barrels of crude oil per day, enough to meet the entire domestic fuel demand and enable future export to neighboring countries. According to a government statement, the project could save Zambia millions of dollars annually by reducing its reliance on fuel import. Meanwhile, construction is scheduled to begin in the third quarter of 2025, with the first phase of commercial operations targeted for 2026. The agreement was signed between the Zambia State-owned Industrial Development Corporation, IDC, and China's Fujian Jiangxing Corporation. An IDC spokesperson said that crude oil will be sourced from the Middle East and imported via Tanzania's Dar es Salaam port. Rwanda has been added to the U.S. travel advisory list with a level 2 warning due to border tensions with the Democratic Republic of Congo. The advisory cites security risks near border districts such as Rusizi and Rubavu, while other areas remain peaceful. Tourists are advised to stay informed on conditions, especially near border regions, affecting Rwanda's tourism appeal. According to the updates issued by the U.S., the Department of State places Rwanda under a level 2 warning due to tensions along its western border with the Democratic Republic of Congo (DRC), marking a shift in how international agencies assess safety in the region. Rwanda's inclusion signals a sobering turn in a region previously regarded as one of Africa's safest for tourists. Alongside Rwanda, countries like Egypt, Mozambique, Nigeria, Israel, Lebanon, Haiti, and the Dominican Republic Islands or crime. Some like Haiti have seen conditions worsen to the point where international authorities advise against all travel entirely, in caution among global travelers and government in response to shifting geopolitical conditions. In the meantime, as of July 2025, 12 African nations were listed under the official U.S. high-risk travel warning at level 4, which is do not travel, and level 3, which is to reconsider travel, reflecting a complex mix of regional instability, weak governance, rising crime, and broader geopolitical tensions. By contrast, the other two advisory levels, which are level 1, which is exercise normal precautions, and level 2, which is exercise increased caution, indicates relatively minimal risks. These levels are typically reserved for countries with isolated security concerns or low-level threat that do not significantly disrupt travel or daily activity. These advisories reflect not just the risks to travelers, but also the deepening fragility of state institutions across part of the continent. With that being said, let's look at the list of African countries currently on the U.S. Department of State travel warning list as of July 2025. Top on the list is Libya, which they updated last on July 16, 2025. The advisory level is level 4, which is then not expected to travel. Second is Somalia with level 4, which is then expected to travel. Third, fourth, and fifth, Burkina Faso, South Sudan, DRC are not expected to travel. And last is Nigeria, which are in level 3, which are they're supposed to reconsider their travel. 8 on the list is Burundi, which they are also expected to reconsider travel. 9 is Uganda, Guinea-Bissau, Niger, Chad, which they are also expected to reconsider travel. And that's the list showcasing the Aliko Dangote, president of Dangote Industries Limited, has raised concerns about Africa becoming a dumping ground for substandard petroleum products due to its heavy reliance on import. Dangote explained that his decision to build the Dangote refinery was rooted in a deep desire to make Nigeria self-sufficient in refined petroleum products and inspiring similar effort across the continent. It also revealed that many skeptics question the Dangote Group's ability to deliver projects of such magnitude. He expressed hope that the refinery will inspire other African nations to expand their refining capacity and invest in value-added sectors rather than continuing the cycle of exporting raw materials. Dangote has also called on wealthy Nigerians to invest more within the country, emphasizing that domestic investment is the surest path to long-term national development. Meanwhile, despite the fact that Nigerian billionaire recently detailed plans to build Nigeria's largest seaport to expand his firm during a visit to the Dangote Petroleum Refinery by Global CEO Africa members, Dangote explained that the petroleum sector is an industry he is eager to enter. This is also ironic considering the fact that his refinery currently has in-depth ties with the sector he alluded to. According to Dangote, Nigeria does not utilize up to 40 million liters of fuel each day despite official numbers. He said that during the gasoline, countries with substantial foreign exchange and gold reserves observe stability and safeguard their national interest at a period of rising economic instability, geopolitical tensions and volatile commodities market. These reserves, which are composed of gold holdings and foreign currencies like the US dollar and euro, act as a vital financial buffer. The significance is represented in international rankings like those created by Global Firepower, which monitors national capabilities like economic strength and defense readiness. Large gold and foreign exchange reserves provide a number of strategic benefits for many nations, particularly those in Africa and the Global South. They serve as a safety net in times of emergency to start. Countries with large reserves can utilize them to stabilize the currency, pay for necessary import, or satisfy international debt commitments without going into default, regardless of the circumstances, a sudden economic shock, a pandemic, or a decline in commodity prices. With that said, here are the countries in the world with the highest reserves of foreign exchange and gold, according to Global Firepower. We apologize for that. The composite leading business cycle indicator in South Africa decreased by 1.3% month-over-month in May 2025, following an upwardly revised 0.6% fall in the previous month. This marks the second consecutive monthly decline, reflecting downturns in 9 of the 10 available component time series. The largest negative contributors were decreases in the number of RES plans approved and the volume of domestic orders received in the manufacturing sector. The only positive contribution came from an increase in South Africa's US dollar denominated export commodity price index. The Democratic Republic of Congo, DRC, signed a framework agreement with American mining firm Cobalt Metals to explore critical mineral resources across the country. The signing took place in Kinshasa in the presence of President Felix Tshisekedi. Cobalt Metals, which is backed by billionaires Jeff Bezos and Bill Gates, plans to invest more than $1 billion in the DRC's mining sector. The company's initial focus is the Manono lithium deposit, considered of the largest in the world. Lithium is a key component in batteries and green energy technologies, making it highly strategic for global market. Beyond Manono, Cobalt will launch a large-scale mineral exploration program across the country using advanced technology to identify high-value deposits. The agreement includes plans to digitize the DRC's geological archives currently held at the Royal Museum for Central Africa in Belgium. Cobalt also intends to apply for exploration permit covering more than 1,600 square kilometers before July 31st, 2025. We will go on a break, and when we're back, we'll take a look at Kenya that is set to roll out national crypto policy and VASP bill. And now to the rest of the stories. Kenya is making a bold move to embrace the digital economy with Bitcoin, stablecoins, and blockchain tech now in its sight. The government, through the Ministry of Information, Communications and the Digital Economy, has confirmed plans to explore these technologies as part of a broader push to future-proof the economy. The Cabinet Secretary William Kabogo announced on X, calling digital assets the future of finance. In what feels like a complete shift from the usual caution, Kabogo said Kenya is pivoting from apprehension to leadership. The country is now supporting blockchain innovation, exploring stablecoin development, and even looking into Bitcoin reserves. While regulations are still in the works, this public commitment signals that Kenya wants to be taken seriously in Africa's digital economic race. Part of that vision includes a national policy on virtual assets and a virtual asset service providers VASP bill, both currently in development. This will aim to strike a balance between the innovation and safety while enabling financial inclusion. Nigeria's gross domestic product (GDP) grew by 3.13% year-on-year in real terms in the first quarter of 2025. This is according to the latest reports by the National Bureau of Statistics. According to the Bureau, this represented an improvement over the 2.27% growth recorded in the corresponding period of 2024. The NBS, in its first quarter of 2025 GDP report, said the economic performance in the quarter was driven mainly by the services and industry sectors. This was according to the Statistician General of the Federation, Adeyemi Adeniran. The figure, according to him, showed an increase of 41.7%, compared to the figures obtained during the 2014 GDP rebasing exercise. Adeniran said the top 5 performing sectors include crop production, trade, real estate, telecommunications, and the oil and gas, adding that the recent rebasing covered the period between 2019 to 2023, using 2019 as a new base year. Ethiopia has finally approved its long-anticipated startup law, marking a pivotal moment, for the country's growing tech and innovation landscape. After nearly 5 years of consultations and drafting, the Council of Ministers ratified the Startup Business Proclamation on Sunday, July 13, 2025. This move provides long-awaited regulatory support for local entrepreneurs who have operated for years in the policy vacuum. The law offers a formal definition for startups in Ethiopia and sets the foundation for a more structured innovation ecosystem. It introduces a comprehensive framework that includes a National Startup Council and official recognition. These bodies will coordinate and implement initiatives to support startups, including facilitating access to funding, creating incubation spaces, and providing tax incentives. For startups, the law is expected to simplify business registration, reduce bureaucratic hurdles, and offer legal protections previously unavailable. Those recognized under the new framework will also gain access to government-supported capacity-building programs, making it easier to scale. The Nigerian National Petroleum Company Limited (NNPCL) was declared a 905 billion naira profit after tax for June 2025. The state-owned oil and gas firm also remitted a total of 6.96 trillion naira to the Federation account within the first 5 months of 2025. This was contained in the data from the NNPCL monthly report summary for June released in Abuja. The company also posted a profit after tax of 905 billion naira for June 2025, marking a decline from the 1.054 trillion naira reported in May. Despite the drop in monthly profits, the company confirmed a total statutory remittance of 6.961 trillion naira to the Federation accounts from January to May 2025, a 3 trillion naira recorded between January and April of the same year. The reports indicated steady rebound in upstream activities, with daily crude oil and condensate production rising to 1.68 million barrels per day, the highest since January. Meanwhile, this performance highlights the NNPC's continued role as a crucial revenue contributor to the Nigerian government and the fiscal pressures and ongoing economic reforms. Morocco inflation rate holds at one-year low in June. The annual inflation rate in Morocco held steady at 0.4% in June 2025, matching May's one-year low. Price growth accelerated in food and non-alcoholic beverages, while the pace of decline slowed in transport. Meanwhile, inflation was unchanged across several categories, including furnishing, clothing and footwear, healthcare and education. However, inflation eased slightly in alcoholic beverages and tobacco, housing, utilities, restaurants and hotels, as well as miscellaneous goods and services. On a monthly basis, consumer prices rose from 0.4% in June, rebounding from a 4.0% decline in May. Sub-Saharan Africa is on track to reach 518 million mobile internet users by 2030, according to GSMA intelligence. This growth represents a 6.2% compound annual growth rate and a projected mobile internet penetration as at 2023 the number was 320 million to a 27% penetration. The numbers reveal how non-mobile connectivity will continue to shape digital access across the region, with mobile phones acting as the primary gateway to the internet for millions. The rise to 518 million mobile internet users will define the digital infrastructure landscape in sub-Saharan Africa. More users online means greater demand for data, digital literacy. Interest rates data across Africa reveal that Zimbabwe has the highest rate at 35%, while Seychelles maintains the lowest at 1.75%. Nations with the top 10 highest interest rate on the continent. This signals how many West African central banks remain aggressive in using high rates to manage inflation and currency pressures. This data is critical in understanding the business and investment climates across Africa. High interest rates mean the cost of borrowing remains expensive, impacting businesses, mortgages and personal loans, while providing higher returns for savers. For entrepreneurs and SMEs, these rates significantly affect expansion and working capital decisions, while for households, they translate into higher loan servicing costs, often focusing delayed spending. Lastly, on African economy, let's look at the US dollars against other African countries' currency. The US dollars against Nigerian naira is at 1,532.695, an appreciative point of 2.705, a percentage of 0.18. The US dollars against South African rand is at 117.58 depreciative point of 0.0299, a percentage of a negative 0.17. The US dollars against Zambian kwacha is at 23.1300, an appreciative point of 0.1300, percentage of 0.57. The US dollars against Egyptian pound is at 49.0900, a depreciative point of 0.1600, and a percentage of a negative 0.32. The US dollars against Algerian dinar is at 129.751, a depreciative point of 0.232, a percentage of a negative 0.18. The US dollars against Angolan kwanza is at 918.650, a depreciative point of 0.05, a percentage of 0.00. That brings us to today's edition of African Economy. Thank you so much for watching. For more business stories and the latest updates, stay tuned to African Economy. Or follow us on all of our social media handles at SpectrumTVLive.ng. I am Wangfon Walter. See you soon.